Hi, everyone. Rich Saperstein, January 8th, 2026. Instead of doing a written outlook this year, we're going to do it in video snippets. And today I want to talk about 5 spooky things for the markets from 2025. The reason I'm doing that is because this week POTUS basically said institutional investors cannot own single-family homes, and he wants to suspend dividends and return to capital to shareholders in the defense sector unless they accelerate their factory build-outs. And we removed the leader of Venezuela. So lots of volatility. Here are 5 things that occurred last year. Start with Liberation Day tariffs, spooked the market, dropped it significantly, expecting that the tariffs would lead to a global trade slowdown, the end of U.S. exceptionalism, and a flight from the dollar and the selling of U.S. dollar assets by non-U.S. investors, of which none of that materialized. The One Big Beautiful Bill was concerned that that would lead to further deficits, which it will, but from a market's perspective, that investors would reject current yields and require higher yields on bonds issued by the U.S. Treasury as a result of growing deficits. And also that non-U.S. investors will be net sellers of U.S. Treasuries and fixed income securities, leading to higher rates. So if you put the two together, tariffs, the One Big Beautiful Bill leading to higher deficits, the big concern was that tariff-induced inflation would cause the bond market to sell off, driving rates higher, and then the increased deficit and issuance of treasuries would further catapult the need for higher yields to clear the market. None of that happened, and the 10-year treasury actually declined from 456 down to 417 over the year. That was a material scare in the market. We actually were extending maturities into all of that, and as listeners and readers know, we extended maturities in long-term municipals throughout the entire year. We had a DeepSeek moment, which really rocked technology for about a hot second, with DeepSeek, the China AI developer, jumped out ahead, supposedly, of our capabilities and called into question the hyperscaler CapEx that we're doing here. And that led to the concern about overbuilding of data centers, the huge boom in CapEx that we're spending by our large cap tech companies, and called into question whether or not those companies are ever going to get a return on those investments. That's one of our large overweights. We stayed with it. We'll continue with it. And that is not something that's scaring us out of the markets. So finally, these 5 items, they materialized in 25. They never changed our positioning. And we can expect more volatility in 2026, similar to what happened in 2025. As you know, in 25, the S&P was up 18%. The NAS was up 21%. So we have to look past a lot of these short-term media-exposed concerns and stay focused on fundamentals. I'll be back again with the next video shortly.